Aurora innovation is making big waves in the autonomous vehicle industry, and investors are starting to take notice. Aurora's stock has been surging after the company announced a strategic partnership with German-based Continental and AI giant Nvidia to scale its driverless truck operations. This follows an impressive 44% stock gain in 2024 and a mammoth 261% rally in 2023, despite the company not generating any consistent revenue. Let's break down what's happening and whether this high-risk, high-reward play is worth your attention. Aurora plans to launch its first driverless truck service in April 2025, starting with a monitored route between Dallas and Houston. The company's long-term goal is to mass-produce these trucks by 2027, with production samples expected in the first half of this year. To pull this off, Aurora is teaming up with Continental, a global leader in automotive parts manufacturing, and Nvidia, whose Drive Thor platform will power the Aurora Driver's core computing system. What makes this partnership significant? Well, Nvidia's Drive Thor chips will handle critical real-time processing for autonomous navigation, while Continental will handle large-scale manufacturing of Aurora's hardware. This collaboration could give Aurora the production capacity and technological backbone it needs to scale rapidly, and in theory, transform the trucking industry. CEO Chris Urmson believes this could be monumental. And he's not just talking about deploying one truck, he's envisioning thousands on the roads, which could significantly improve logistics efficiency. But while the vision sounds promising, there are serious financial concerns for investors. Aurora hasn't generated any revenue in the past 12 months, and its losses totaled a hefty $747 million. And over the past 9 months, the company has burned through $469 million, leaving it with less than $1.3 billion in current assets. With heavy investments needed to bring its driverless trucking platform to market, Aurora is likely to issue more stock to raise cash. That means more dilution for current shareholders, a problem the company has already faced. On the flip side, Nvidia's involvement signals serious industry potential. Nvidia has been actively expanding its presence in autonomous driving, working with major players like Toyota, Waymo, and Mercedes. Its CEO predicts the autonomous vehicle sector could become a multi-trillion-dollar industry, and Nvidia itself is on track to generate $5 billion in revenue from its automotive segment this year. For Aurora, the stakes are high. If it can deliver on its promise of safe, scalable, and reliable driverless trucks, the payoff could be massive, perhaps becoming the next Tesla even. But with mounting financial pressure and the need to keep raising capital, it's clear this is a high-risk bet. Whether you're willing to take that risk depends on your appetite for long-term plays in the autonomous tech space. The bottom line, Aurora is positioning itself as a major player in the driverless trucking game, backed by powerful names like Nvidia and Continental. But without a steady stream of cash flow and a high cash burn rate, which may intensify in the future, investing in Aurora now means betting on future execution, not its current fundamentals. If the company succeeds, it could revolutionize the logistics industry, but if it falls short, the risk of dilution and continued losses could weigh heavily on the stock price. Currently, the stock's market cap is worth of $14 billion, and it's trading around its 52-week high. There's a lot of potential upside for the stock, but its high valuation also means there's a ton of risk too.